Welcome to The Green Rush, a podcast about the intersection of cannabis, the capital markets, and culture. On a weekly basis, hosts Ann Donahoe and Louis Goldberg of KCSA Strategic Communications speak with the business leaders, financial experts, cultural icons, legislators, and generally interesting people moving the cannabis industry forward. This week, Louis is on solo hosting duty and speaking with Matt Markiewicz, Managing Director of the Cannabis ETF, the first passively managed pure play ETF solution for investing in cannabis. Launched by Matt earlier this year, the Cannabis ETF, listed on the New York Stock Exchange under the ticker symbol THCX, focuses only on companies in the legal marijuana, CBD, and hemp industries. With earnings season wrapping up, we wanted to sit down with Matt to get his take on all things capital markets, including his reactions to post-earnings on major players like Tilray, Acreage Holdings, and Canopy Growth, his process for analyzing cannabis stocks, and whether he thinks investors should fear a cannabis bubble. So don't sit back, lean forward. Now on to our conversation with Louis and Matt.
I'm talking with Matt Markiewicz, CEO of Innovation Shares, the first
Managing Director.
Oh, Managing Director. Excuse me. I'm sorry. I'm a managing partner here, so there's no CEO at KCSA. But the first ETF, cannabis traded ETF. Matt, thank you for coming in.
Thank you for having me, Louis.
Well, and full disclosure, Matt is a client and a friend, so somebody who I've been looking forward to having this conversation with for a while now.
Likewise, yeah.
So we're recording this on August 15th, and the Dow has been up and down all day today. In the last couple of weeks, it has just been an absolute shit show in the general market, and for the last 3 months or so, the cannabis stock market, they've just been getting just slaughtered, both the Canadian plays, the U.S. plays. What's going on?
We have a couple factors, in my opinion, that are at play here. One is we had a situation up in Canada with one of the licensed producers that was found to be growing cannabis non-compliantly.
Can't trust. I'll say it. You don't have to.
Okay. That's fine. And that obviously, from a trust perspective, is very damaging for the sector, because this is a company that's now dually listed in Canada and U.S. And in order for institutional investors especially to be getting involved in this space, they need to feel that they have a level of comfort that companies are operating compliantly and complicitly with the laws in that jurisdiction. That obviously did not happen.
Right. Danny Moses talks about and how he invests by looking at corporate governance, that's the first thing. And this is clearly the biggest violation of corporate governance that you can have.
And it's early on in the sector's life cycle here, if you will. And so to have this sort of thing happen from, I consider it's obviously was one of the larger LPs this early on, especially after they get dual listed, is again damaging to confidence for investors.
And you think that has percolated out through the rest of the sector, or was that do you think investors are looking at this as a one-off?
No, yeah, I would agree that this incident hopefully is a one-off. I'm sure there'll be others, just like there have been bad actors in every movie. It doesn't matter the sector. That we've seen this in telecom, media, everything over the years. So it's not a surprise that it's happening in cannabis, a heavily regulated industry, especially up in Canada. So again, I would expect more, but that's, again, the whole reason why you invest in a diversified basket of securities for the industry.
Nice little plug for your ETF. So why don't you tell us, what is your ETF? How do you pick the stocks that go in it? How does it managed?
Sure. So the Cannabis ETF is the name of the fund. THCX is the ticker. It trades on the New York Stock Exchange. Launched on July 9th. And in part, the stocks are selected because there are some rules in the United States that allow what you can hold in an exchange-traded fund structure. Part of that is a stock should have a $100 million minimum market cap.
Okay.
So that's the starting point right there, which
a lot of companies don't make.
A lot of companies do not make that, correct. We also have some liquidity requirements because our goal is to build a diversified liquid basket of stocks in the cannabis industry.
So that you can get in and out of them easily?
Well, for us, it's more actually for the investor, so that liquidity in the underlying stocks will be representative of the liquidity in the ETF itself. So if you have a bunch of illiquid stocks in the fund, in the portfolio, you're going to have a very potentially illiquid ETF. In addition, the trading spreads are going to be very wide. And a lot of investors like to see narrow, tight spreads.
Right.
And if the spreads are wide on the underlying stocks, it's going to be represented in the
Explain
ETF.
what a spread is for people who don't understand it.
Sure. So when you're buying or selling a stock, there's what's called a quote. And there's
I'm buying THCX and the quote is $20.
Is $23.05 at the bid. So that's where you can sell it.
Right.
And $23.10 at the ask.
So there's a 5-cent delta between the two.
That's called the trading spread.
Right.
And you are buying it at the ask and you are selling it at the bid.
Right.
Okay. So that 5 cents, you would think of it in terms of basis points. So 5 cents over 23.10 is roughly 22 basis points. I say 22 because that has been our trading spread since we launched the fund.
And the tighter the spread, the easier it is to get in and out of a stock. And the bigger the spread, the more likely it is that your offer to buy or your offer to sell languishes for a while.
No, you have to think about it. It's easier for investors. And sorry, I shouldn't say easier. It's easier, but it's also less costly. The wider the spread, the more it costs investors to trade the stock because that gap is wider. So I don't want to use the used car market as a great proxy, but when you buy a car for $26,000 and you sell it 2 years later, you're not going to get $26,000 for it, right?
You're going to get 13.
Yeah, so that's a large spread between where you're buying it and where you're selling it.
Okay.
If that's why certain cars, models like Subarus, Toyotas, right? They have a higher resale value, and they're almost higher in demand because people feel comfortable if they want to sell that car, they're going to get out at
closer
a more
to what they
paid for it.
Right.
Yeah. Does that make sense?
It does.
Yeah. Okay.
How many stocks are in the ETF now?
So currently there are 36 stocks in THCX.
And who are the bigger names that people would recognize?
Well, that bears a quick conversation about how we weight the portfolio. And
how do you weight the portfolio, Matt?
It's what we call in the industry a modified market cap methodology.
Okay.
The fund tracks something called an index. And an index is just a collection of stocks that meet certain requirements. So think about the index as a portfolio, but you actually can't invest in an index as an investor. You have to invest in a fund that tracks that index. So that index is called the Innovation Labs Cannabis Index, rebalances every month.
Okay.
And I can go into that in a little bit about why it's every month versus every quarter usually for a typical ETF. But that index, as I said, contains 36 stocks, and therefore the portfolio of the ETF contains 36 stocks.
Okay, and
it's weighted again modified market cap, and the rule is at a rebalance the stock can equal no more than 8% of the portfolio.
So any one stock can so you have if Canopy Growth is in it and they're trading at $50 and it goes up, for example, to $80, you're gonna have to sell out of it, some of that, to keep it at the 8%.
You got it, every month. So it's a way to actually accomplishes two things, having that monthly rebalance. It smooths out the volatility in the sector, which everyone who's listening to this podcast especially knows that the public cannabis market is quite volatile.
Yep.
So that's one, because you're selling, as you said, the winners, you're harvesting the gains, and you're kind of buying the losers, and that strategy should, over the course of time, show lower volatility.
Are the gains then distributed out on a monthly basis, or where do those gains go?
No. So actually, it gets a little bit, I don't want to go down the rabbit hole on how an ETF is structured.
Okay.
But one of the reasons ETFs have grown in popularity over the past 15 years is that they are a more tax-efficient structure than other investment vehicles, or can be, I should say. And the gains that are harvested in the portfolio are allowed to be offset against the losses in a certain manner. And it's almost on a portfolio basis. you kind of as you shuffle the deck, it doesn't matter what card in the deck was worth more than the other. They're almost all looked as the same.
Mm-hmm.
And because of that, you see a much lower payout of capital gains historically in ETFs than, say, mutual funds.
And also lower cost of maintenance, right?
Yes, correct.
If you're in a traditional mutual fund that's actively managed by a human, for argument's sake, you may be paying 1 to 1.5% of your total investment into it. And ETFs tend to be much lower cost.
Yeah, so the management fee on THCX is 70 basis points annually right now.
Which is 0.7%.
Correct.
How's it been doing so far? Because it's only been trading for about a month.
Yeah. Well, the cannabis market, as you alluded to earlier, has been on a little bit of a slide.
Little bit of a slide.
Yeah. And so we can't, we're not making active bets in the portfolio as it's just tracking the index.
Right.
So as of today, down about around 12%, maybe a little bit more. I mean, I haven't looked in.
It's time to double down.
Well,
actually, do you think that? Do you think that the sector itself is going to rebound?
Over the longer term, that is the thesis, yes. I mean, again, we're very early stages of this generational investment opportunity. And there's going to be ups and downs. There's going to be volatility like you've not witnessed in other industries or sectors before. Because of that, you just have to hold on and find your entry points. So I would say it's possible for investors to brace for further weakness, especially in the next couple weeks of the summer here, as trading is slow, volumes tend to be lower, which means volatility tends to be higher, and you see this often in the summer. So to me, the bit more true litmus test will be mid-September, when things get back to normal trading activity and you don't have these light volumes, and that'll be better. But I would say I would brace for some more volatility in the cannabis market in the next couple of weeks.
So just remind everybody, I'm talking with Matt Markiewicz from Innovation Shares, the first
passively managed pure play cannabis ETF.
That's a mouthful.
It's a mouthful.
How hard was it to get onto the New York Stock Exchange? Because historically, the stock, they've only taken so far Canadian companies. They're not allowing U.S. companies. And while you're nowhere near to being a plant-touching company, I mean, you're still a cannabis play of some sort. So how was the process of getting listed?
I'll start by saying it was a very stringent review process by the SEC. Of our initial prospectus, which we filed at the end of November 2018.
Okay.
And
like 9 months later, is that?
Yeah, I mean, that's 8 months later, so take away the 30-day government holiday.
I was told there would be no math, by the way.
Oh, sorry. Is that always the case on the Green Rush podcast?
No, it's just the case with me, with Lewis.
Well, how about this? I won't ask you to do any subtraction or addition or multiplication, but normally the ETF launch process takes anywhere between 75 and 90 days.
Right.
It took us almost triple that because of the extra scrutiny from regulators. And part of that was satisfying New York Stock Exchange requirements to be able to list an exchange-traded product on their marketplace.
Right, on their exchange.
On their exchange.
Right.
So I want our ETF to be traded on the biggest, most notable equity trading exchange in the world. So it's not a branding thing, but necessarily like investors feel good about investing in something that's NYSE traded, right? Stocks included, and as well as ETFs. So it was sort of a no-brainer for us to try to get on the NYSE. But again, we had to be compliant with their rules, and part of that was satisfying that a requirement that a stock or a company, in order to be included in the index, would not be breaking any laws where in the jurisdiction where they operate.
So that precludes it precludes every MSO, right?
100% correct. We are not allowed to own any of the MSOs, the stock of the MSOs in the portfolio.
That must be frustrating. because you look at companies like Curaleaf or Acreage or TerraTech. There are dozens of
green growth brands,
Yeah.
and differentiated play, right? Yeah.
Right. Yeah. I mean, we can list all of them,
Yep.
and are there moments where you're like, God damn it, I really wish X was in the portfolio.
Absolutely. And the original index that we had built included some of those companies until we started going through this review process that I mentioned, and the had to comply with the rules. So
Yeah,
that's
it's either do this or don't trade.
exactly. And there are other cannabis ETFs, which I'm sure we'll get into. They all had to comply with that as well. So it's not like we were being singled out. None of the 5 cannabis ETFs can own the equities of companies that touch the marijuana plant in the United States. So much so we actually had to get a separate legal opinion. It came from our trust counsel that said we would only own stocks on 5 exchanges, one of 5 exchanges: the Australian Exchange,
Right.
the New York Stock Exchange, the NASDAQ, the Toronto Stock Exchange, and the THCX Venture.
So we clearly don't have the CSE on there.
There are no CSE stocks in our portfolio or any
NEOs.
or NEOs. No, sir. Or there are no OTC traded stocks either.
Right. Right.
Don't forget about that.
How could I forget about the OTC? When you're not an actively managed fund, right? Which means you personally are not sitting and picking winners and losers. It is a passive fund. That means that it mirrors this index, and the index is done algorithmically. Is that correct?
We have an AI element to how the index is built. And this AI element includes a process whereby we have actually a patent pending on this process of building an index using media sentiment. And our algorithm actually reads tens of thousands of news stories, and it's able to discern what the sentiment is around a particular stock given a certain theme.
And what are the themes?
The theme is cannabis.
Oh, okay. I'm sorry. I thought you meant like winners, losers.
No.
goodwill,
So
right.
so thematic investing involves finding a bunch of companies. What we consider ourselves a thematic
Right.
ETF company. Finding a group of companies that have a common relationship to a long-term structural growth trend.
Okay.
And they may be in completely different industries. And they may be in completely different areas of the world. But those companies that you're trying to identify are all hoping to show an increase in value because they have some relationship to this theme. So, of course, firms like Aurora Cannabis, Tilray, Trulieve, for instance,
Kronos.
right? Yeah, these are cannabis stocks, but there are other companies that are benefiting from the growth of the cannabis industry globally that you wouldn't necessarily associate with, a cannabis stock. A company like Scott's Miracle-Gro, it's one of the more obvious ones, of
Right.
course. But then there are stocks such as Perk and Elmer.
I'm not familiar with that.
Yeah, they do lab testing
Okay.
and analysis for cannabinoids for a variety of companies, but they have the very expensive and extremely sophisticated equipment that's used to say, determine that this Jack Herrera strain is 22% THC. That just doesn't come out of there.
Well, you just happen to pick my favorite strain. It's Jack Herrera's.
It seems like it's everyone's favorite strain these days.
It's a good strain.
I sort of pictured you as more of like Girl Scout cookie or
No, after I smoke Jack Herrera, I want to go eat
okay.
the Girl Scout cookies.
Okay.
So what is your backstory? Like, what's how did you get to design an ETF and specifically to the cannabis market? That is a theme that not a lot of people who would think that this is where I want to be going.
I've been on Wall Street in some form or another for 22 years,
Mm-hmm.
so not a typical cannabis background, one might say. Various sales, trading, research roles.
Mm-hmm.
I was most recently at a small asset manager called BlackRock.
That's a tiny little guy. I've never heard of him.
No, and they own an exchange-traded fund division named iShares, also fairly small. And so I was there for.
By the way, that is the definition of sarcasm. If you didn't know that, and that was just saying.
Understood. I should probably.
No. Sarcasm plays great. I love sarcasm. I speak fluent sarcasm.
You ooze sarcasm.
Amongst other things.
Okay. So I was at iShares, the world's largest provider of ETFs, for almost 7 years. And that's where I cut my teeth on ETFs, and wanted to do something a little more entrepreneurial in the business. Formed this company, Innovation Shares, with some partners who have an investment management background as well. In the fall of 2017, we actually have 2 ETFs that we launched prior to launching THCX. One is a thematic blockchain ETF.
Okay.
And the other was a ETF that invests in the electric and autonomous vehicle ecosystem.
Cool.
Both also trade on the NYSE.
Which, by the way, there is a theme to all 3, because you smoke a joint, you get in an autonomous vehicle, and I don't know how to play blockchain, but you don't want to be driving high. So,
blockchain actually runs the software that
there you go.
Encrypts the directions while you're in your autonomous vehicle, so no one's hacking. Instead of I'm thinking Vegas. There are autonomous vehicles in Vegas, so sort of getting.
So you're going to go to Planet 13. You're going to pick up your Tyson Ranch joint.
Yep.
You're going to get into your autonomous vehicle, and it's going to take you back to your hotel.
Yeah, you're going to the MGM.
Yes.
Right, and because you're going to watch some UFC.
Yes.
735,
and Joe Rogan's going to be there high as a kite.
Yeah, but you got there safely. And you didn't have to ride with anyone because you are in an autonomous vehicle.
And we've invested in all 3 sectors and made money.
All 3 themes,
same,
right at the same time.
It's a beautiful thing.
So, we launched those 2 ETFs early 2018, and as we're always looking for what I will call a cutting edge theme, we saw the rise in IPOs, capital markets issuances. The media talking about cannabis more, but there weren't many ways to invest in the sector. Or
in a basket.
Space.
You could invest in individual
stocks,
names.
Yeah, but from a diversified exposure perspective, investors were looking for something liquid, tax efficient, and diverse.
Right.
And that's what we set out to build. Rewinding a little bit, in the summer of 2017, my mom broke her collarbone. And everything's all healed up now. And as part of her therapy, the doctor suggested to her about using some
cannabis
in lotion and cream in topical.
Right.
And I really didn't, other than having the obvious association with from a recreational aspect, for years I didn't know that cannabis can be put into some gel or cream that you rub on a certain part of your body to treat the pain.
Right.
So that was my foray into,
your first foray.
Yes, of course. Into there are other applications for cannabis, and then we started kind of doing the research and realized, wow, there's a huge universe of companies out there that are applying cannabis or have exposure to the industry in various ways. Something that I like to describe as the sub themes within the greater cannabis ecosystem.
A lot of people say we're still early in this industry. It's first inning, second inning. But there are now hundreds of public cannabis companies, and it feels a lot from the public market's perspective, a lot like 2000 all over again. How do you know which of these companies are going to be Amazon?
For the younger listeners on the podcast, maybe we should explain.
So 2000 was the internet bubble. Most of the listeners here are my age, around 50. But for the people who are younger, 1998, 99, 2000, there was this huge bubble around technology stocks. And that bubble burst, and there was this joke that went around that all of the venture capital money that went into these technology stocks got passed to companies like KCSA, public relations firms, or advertising firms. It was a massive wealth transfer from venture capitalists to PR people.
But you're still here.
I am still here because PR.
So
it worked.
Okay.
It worked. It worked. But cannabis seems to, in some ways, it feels completely different because this is a conversion play. You know, it is a $75 to $100 billion current market that is mostly illicit, that's being converted to a regulated legal market, versus a creation play, which was what technology was. But there are going to be a lot of these companies, even amongst the ones that are in your basket, that are, some of them are going to be pets.com, which are going to be massive flameouts, and you know, a handful of them are going to be Amazon or Google. How are you looking at these companies? How are you figuring out, like, forget about the index, just as somebody who understands Wall Street, how do you analyze these companies? How do you pick winners and losers for yourself?
Well, part of that you know, the process is, as I mentioned, using this patent pending methodology we have, which is able to, again, read through tens of thousands of media stories to pick up sentiment. How do most people do research on stocks?
But media tends to be a trailing indicator.
Not from the work that we've done. Sentiment is actually sort of one of the legs of the value investing stool, believe it or not. And what you're looking at when people do research, you have research reports generally, right?
Right.
On specific equities.
Yeah, like Vivian Azer at Cowen will talk to the management teams of all of the major cannabis companies. She'll do independent store checks. She'll do her research, and then she'll come out with a buy, sell, or hold call on a certain number of names.
So great. I guess there's one Vivian, but there are 20 Vivians covering Cisco. So there aren't many Vivians out there in the United States. I guess that's what I'm sort of trying to say.
Two or three right now.
So it's an undercovered, I mean, outside of Vivian, you know, Chris Carey at Merrill Lynch, I believe, or whatever you want to call it, Bank of America, does a great job covering this space. But there just aren't many people that are giving, you know, this podium to cannabis companies from a research perspective. So that makes it harder for the average investor, even the institutional investor, to be honest with you, to be able to sift through all those, whatever, let's call it 150 enough cannabis companies to figure out what stocks am I going to buy here, right? So that's why using this tool that we have, we're able to kind of, again, discern the sentiment. So, but a lot of what I'm saying is a lot of these investors will do their homework by reading media stories, and they will form that opinion on whether to buy that stock or sell it by what they read.
Right.
So we're almost being ahead of the curve by.
So are you buying individual names, or are you just playing the ETF?
Personally?
Yeah, personally.
I do buy individual names. Not anything we're prohibited from buying names in our ETF, but I do own and trade the MSOs because I can't own them in the ETF. So
okay, so when you look at so there's been this massive shakeout in the MSOs, right? You saw in 17 and early 18 this huge rush to RTO, to go through a reverse takeover back into a public company on the Canadian Securities Exchange, and then raise a ton of money. And you've seen, you know, you saw valuations $1 billion, $2 billion, $4 billion at their peaks, and now there's massive sell-off, right? You're seeing these guys down 50, 70% from where they started trading. How are you making your own buy, sell, hold decisions on these MSOs beyond what you're seeing in the index? Because I know we're here to talk about that, but you're also somebody who knows how to look at the market in a way that the average investor doesn't. So how are you analyzing these companies?
Well, truth be told, I do take a similar approach to the ETF in that I have a diversified basket of, I think, about 11 plant-touching U.S. stocks right now. And I'm not as actively trading it necessarily because I believe that this is going to be a longer-term play.
Right.
But like down here, there are certain names that I feel personally are attractive.
Do you want to name some names? You can say no.
I'm not. I can't own them in the portfolio, but
okay.
Green Thumb, Truly. These are names that I've owned for a while.
Okay.
And when they sell off, this is again my personal account. Full disclosure, it has nothing to do with anything.
No, I understand that. Yeah. This year we've seen some. There was an acceleration of M&A activity, and then it seems to have stopped, and that it correlates the stop with the fall off in the share price because these bigger companies have used their public equities as currency.
They follow the playbook. That's as
yes.
far as I see it. They follow the playbook. Take advantage of the current market conditions. Raise money at high valuations. Go spend the money, hopefully wisely. Only time will tell. And that's part of the market's view. Are these companies spending the money wisely?
So with these stocks down so much. And with you said right now your ETF is down 12%. Would you say are we? Nobody can call a top and nobody can call a bottom, but are you seeing both the Canadian LPs and the ancillary service providers and even the MSOs as a buy now, or are you looking to short?
The entire cannabis sector, let's call it North America cannabis sector,
right,
is starting to, based on how things have fallen so quickly, so fast, so hard, it's looking like there's some value in what's out there. Again, not picking single names because, in my opinion, that's not the best way to build a exposure to a certain industry right. theme, whatever it is, especially, again, given the fact that research and information a lot of these companies is very scant. So yes, I believe things have been overdone a little bit here. I mean, earnings have been, for the LPs, not amazing, not really good, but they also...
That's an understatement. I mean, like Canopy came out yesterday and said that they were net down quarter over quarter. It's not like these guys... The problem is, in my take on this, is that a lot of these companies were stitched together from a diverse portfolio of licenses, whether they be licenses in Canada or licenses in the United States, and you've got great financial operators who really understand how to build a financial company, but they're not phenomenal operators, right? They don't necessarily know how to make a great retail experience or grow biomass at scale or make a great fucking chocolate.
Yep. So actually, I just thought of this. It's almost like a shirt. So you had a sleeve come together, a collar. What's this? Your placket
chest.
Or whatever it is, right? So the companies now are figuring out, how do I get the buttons? How do I actually get this to button, like a dress shirt that you and I are wearing right now? How do I button this up? Mm-hmm. And that's what the industry is going through. How do we button up our business model so that when...
Oh, very nice. How do we button it up?
Yeah. How do the investors look at us to say, this is a business that I want to invest in outside of, as you mentioned, all these operators? I'm not going to say... not ragtag, but everything was kind of put together from licenses, different brands, and it's how do we present it in this really nice package to investors who are not traditionally investing in the cannabis industry. Mm-hmm. And that's one of the opportunities as I see it. You have a lot of institutional investors that aren't involved. They may be looking, but they're not involved, meaning they don't own stocks in the cannabis space, but they're looking. But they need to see that shirt looks like a shirt and that shirt has working buttons.
Right.
So this evolution, I almost view every quarterly report as a button. You're starting from the bottom of your shirt, right? So
You button from the bottom up and not the top down?
Yes.
Really?
Yeah.
I'm a top down guy.
No, bottom up always.
Okay. I don't know how to react to that.
Because sometimes I leave the second button open. And I want to see how my shirt's looking when that second button is.
I got it. And it's looking good.
Thank you.
You got a little hairs poking out, but that's okay.
Yeah. At least yes.
So one of the things you said earlier was, when you were at BlackRock, you had this entrepreneurial bug that bit you. Entrepreneurs are a unique breed. We all are. And in my experience with talking with hundreds of entrepreneurs in my career, the number one thing that defines a successful entrepreneur is actually failure. You don't necessarily learn from success, but the best entrepreneurs are the ones who learn from the mistakes that they've made. What's the biggest mistake that you made in the process of getting any of your ETFs created and launched, and how and what did you take away from that?
There's a lot out of your control when you launch an ETF. And it's learning to, I guess, play the hand you've been dealt and still try to have a winning hand, regardless of what other cards other people are holding. And, so let's let's just use this most recent example. We were the first cannabis ETF recently that sort of filed of the 4 that just got launched, most recent anyway. And we got beat to market by a competitor.
Okay.
And it's managed in a different way than it's an actively managed strategy. But since we've launched, probably 2 months after them, as I mentioned, our spreads have been tighter. So getting back to like what you can control, I'm a capital markets expert by trade.
Mm-hmm.
So I've been working very diligently with people in the capital markets ecosystem around ETFs about telling our story, making them understand why THCX is built the way it is. So that's helped, in my opinion, to translate into tighter spreads, meaning more people want to trade our ETF. Since we've been launched, we have taken in more money than any of the other 4 cannabis ETFs.
Wow.
Our AUM our AUM has grown the fastest. So even though we didn't make it out as quickly as we had hoped or we had expected, I'm trying to do things in my power, like being on this podcast, of course, to tell the story. You can't really control what's going on out there in the cannabis market, but we can help spread the word to investors. Here's why you should be investing in cannabis. Here's how you should do it responsibly. This is a great gateway investment, if you will, if you've never done it before, right?
It's not a gateway drug.
No.
It's a gateway investment. So,
do you think my compliance company would let me use that slogan?
Actually, I kind of love that.
I'll have to talk to my PR firm.
I gave you another one. I gave you a
Serious Green.
Yeah, that was a great one.
That was a good one. Still in the running.
I'm a big fan, but you can actually pair the two. It's a gateway investment to Serious Green.
They may not be happy with that, but I'll try running it through. So anyway, it was really like, this is what we've been giving. We didn't get out on as quickly as we thought, but again, we're trying to tell the message to investors, and then to me, that's what I feel. Things have been. We're very happy with the trajectory of the fund's growth so far. I'm not happy with the industry and how the stocks have traded, but I can't do anything to control that.
Yeah, and we. So we've got time for like 2 more questions, and then
really, I'm really disappointed.
Well, no, but we're gonna
maybe I'll have to spend more time.
Well, no, we're gonna come back. You'll come back.
Okay.
I mean, you'll definitely come back. There's no doubt. This is because the audience wants to know more about the market. Historically, the guys like Tim Seymour who have been on here and Danny Moses who are stock, people who really understand the inner workings of the stock market. The audience reacts to, and I know they're going to react to this. So the first of my last 2 questions for you is, historically, the ETF world, there's a number. You have to get to about $50 million of assets under management to either hit break even and start to make money for the fund managers. Mm-hmm. How close are you to 50 million, and how are you going to get there? So as of, I guess, this morning, we were about 16.7 million assets under management. And that's a function of 2 things. It's the value of the portfolio, right? Mm-hmm. And the number of shares outstanding in the ETF. And we have 750,000 shares outstanding as of today in the ETF. That's what, as a manager, you hope to grow. The number of shares outstanding. The number of shares outstanding, right? That's what, I guess you could say, I can control. I can't control the value of the stocks in the portfolio, but by doing marketing and telling the story to investors, presenting the investment case, I hope to grow the shares outstanding, because unlike a stock, ETFs have an potentially unlimited number of shares outstanding because you create more through the creation redemption process. So our liquidity providers, market makers, broker dealers create more shares, right? That's why it's different than, even though it trades like a stock on an exchange, it's an open-ended investment vehicle. So as I said, we have 750,000 shares outstanding. And as you mentioned, it's very important to get to that 50 million to get on a lot of brokerage platforms. Okay. So you're not always onboarded or being allowed. You're not always not allowed as an ETF to be solicited by a financial advisor right away, because you have to get to those sort of hurdles. So we're working our way towards that. Unfortunately, the cannabis market's not helping us, but doing our part to grow the shares outstanding. And we're doing our part for you. Yes, so. I appreciate that. All right. last question for today, and we will have you back. If you woke up tomorrow and you opened up the New York Post or you opened up the New York Times, what's the one story that you think is seriously underreported about the cannabis industry? It could be anything other than saying, innovation shares THCX is the best stock to buy. What's the story that you wish was being told?
You hear a lot of anecdotes, and since I've been involved in this industry for a short amount of time, about how cannabis is helping people.
Mm-hmm.
Cannabis is medicine.
Yeah.
And that's a word of mouth. That's just, you hear all these little anecdotes. One of our strategic advisors, John Najarian, some listeners may know him. Him and his brother Pete are
the ponytailed guys on CNBC.
On CNBC, yeah. So John tells this story how they got into investing in the business, which was they both played in the NFL. John played 5 games for the Chicago Bears, and Pete had several seasons for the Tampa Bay Buccaneers. But Pete's broken every single bone in his body. And as a way to manage the pain,
right,
he eventually, wanted to stop using what's
opioids
being prescribed and do something more healthy. And they started to get into, cannabis as treatment. And I wish there was a broader study being done of the health benefits of using cannabis as medicine, because it's had such a negative stigma for so many years from a recreational aspect.
Call the White House and get Donald Trump to deschedule so that we can reschedule at a minimum so that we can actually do that kind of research.
That would be great. So to me, that's what I would love to see. Real evidence-based story on the positive benefits of cannabis as medicine.
Matt, thank you so much for coming in. We will definitely have you back. And next time I'm going to have Ann on with us. I know she couldn't do this today, but she wanted to. And we'll get more into what's going on in the markets, recap what's going on with you. I didn't get to ask about what your personal relationship is with the plant, which we'll get to, but we'll just leave that for the next time. I really do appreciate you coming in. This was a lot of fun.
Cannabis! Cannabis!